Welcome to our podcast, where we share our professional knowledge and experience for those considering commercial mortgages or loans. If you are in need of commercial mortgages or loans, contact us for a no-obligation free consultation. Let's start today's episode. Commercial Mortgages for Petrol Stations UK Guide. Investing in petrol stations can be a profitable venture, especially when backed by the right financial support. A common option to finance this type of investment is through commercial mortgages. In the UK, commercial mortgages cater to businesses looking to secure loans for purchasing or developing properties like petrol stations. These mortgages work similarly to residential ones, with lenders providing a percentage of the property cost and taking a legal charge over it as security. Understanding commercial mortgages. Difference between commercial and residential mortgages. When it comes to property financing, there are two main categories: commercial and residential mortgages. Both types of mortgages are used to secure loans for property purchases, but they differ in several aspects. Residential mortgages, as the name suggests, are typically used for the purchase of a residential property like a house or flat, while commercial mortgages are designed for business properties such as petrol stations, office buildings, or warehouses. One primary difference between the two mortgages is the security offered. In a residential mortgage, the security is usually the borrower's home. In contrast, for a commercial mortgage, the security is the business property being purchased. Moreover, the cash involved in a commercial mortgage usually depends on the business's income and financial stability instead of the borrower's personal income, as is the case with residential mortgages. Basics of commercial mortgages. When applying for a commercial mortgage, it's essential to understand its fundamentals. Commercial mortgages can be used for various purposes, such as buying a new business property, refinancing an existing one, or releasing equity tied up in commercial real estate. Unlike residential mortgages, commercial mortgages usually have a higher interest rate and require a larger deposit, often around 25 to 40%. This is because lenders perceive them to carry more risk. The loan term is typically shorter as well, ranging from 3 to 25 years. It's important to note that commercial mortgages tend to be less regulated than residential ones. As a result, lending criteria may vary significantly between lenders, and interest rates can be fixed or variable. Lenders will assess your business's financial health and creditworthiness by examining its cash flow, balance sheet, and profitability. Ensure your business has a solid financial track record and a strong business plan that demonstrates your repayment capacity and the property's commercial viability. If you're thinking of obtaining a commercial mortgage for a petrol station or any other business property in the UK, consider consulting a mortgage broker or advisor to help you find the most suitable financing option tailored to your needs. Commercial mortgages for petrol stations. Why consider petrol stations for commercial mortgages? Petrol stations can be an attractive investment opportunity due to their steady cash flow and potential for high returns. When considering a commercial mortgage, petrol stations offer a solid option as they typically come with a well-developed land and property. Acquiring a petrol station through a commercial mortgage can provide you with a sustainable asset to build your portfolio. Additionally, if the property has a lease in place, this can add extra security to your investment. Understanding petrol station market in the UK. The petrol station market in the UK has seen some fluctuations in recent years, yet it remains a reliable investment option. When purchasing a petrol station, several factors come into play, such as the location, size of the land, and cost. It's essential to carefully consider these aspects to ensure that the petrol station meets your investment needs. To secure a commercial mortgage for a petrol station, lenders will take into consideration the property value, lease length, and overall financial performance of the business. It is worth noting that the cost to purchase a petrol station will depend on the location, property size, and any additional businesses attached to the station, like a convenience store or car wash. Navigating the petrol station market can be complex, therefore, seeking professional assistance from a commercial mortgage broker may prove beneficial in identifying suitable properties and securing the best financial terms. With proper guidance, you can make an informed decision and expand your investment portfolio with a commercial mortgage for a petrol station in the UK market. How to finance petrol stations. Sources of finance. There are various options available when it comes to financing petrol stations in the UK. High street banks, specialist lenders, or even private lenders may be suitable for your needs. You should explore different options and compare the terms and conditions of each to find the best fit for your business. Some common sources of finance include: commercial mortgages typically function like residential mortgages, with repayment terms usually ranging from 20 to 30 years. These loans can be used to purchase or redevelop a petrol station, and the property will be used as security for the loan. Secured loans can help you secure larger sums, often starting at £250,000 or more. They usually offer competitive rates, starting at 2% above the base rate. Unsecured loans are smaller loans, typically up to £25,000, and may be suitable for smaller investments or cash flow management. Applying for commercial mortgages. When applying for a commercial mortgage to finance your petrol station, you need to prepare a comprehensive business plan. This plan should cover the proposed location and size of your petrol station, the expected demand for fuel and other services at the station, the amount of finance you require, detailed financial projections, including cash flow and profit and loss forecasts, a clear strategy for marketing, sales, and operations, your experience and expertise in managing petrol stations. The lender will assess your application based on your business plan, financial standing, and creditworthiness. They may also consider factors such as local market conditions, competition, and projected petrol station industry trends. To improve your chances of success, ensure that your business plan is clear, well-researched, and convincing. Your financial projections are realistic and supported by accurate data. You have contingency plans in place to handle potential risks or challenges. You showcase your expertise and experience in managing petrol stations. By following the guidelines mentioned above, you will be better equipped to navigate the process of financing your petrol station in the UK. Remember to thoroughly research your options, prepare a strong application, and consult with trusted professionals as needed to help make your petrol station a success. Eligibility and application for commercial mortgages. Eligibility criteria. To qualify for a commercial mortgage for petrol stations in the UK, you must meet specific eligibility criteria set by the lenders. Generally, lenders are looking for borrowers with a solid credit history, a reliable source of income, and a comprehensive business plan. In most cases, you may need to meet a minimum loan amount, typically starting at £25,000 with no maximum limit depending on the lender to the power of 1. Property used as security also plays a vital role in determining your eligibility for a commercial mortgage. In the case of petrol stations, the value and condition of the property are crucial factors that lenders will assess when considering your application squared. Mortgage application process. When applying for a commercial mortgage for your petrol station, it's crucial to prepare well and have all the necessary documentation ready. Here are the steps you should take during the process. Research lenders. Before applying, research different lenders and their offerings, including specialist financing providers. Compare their interest rates, terms, and conditions to find the best deal for your needs. Researching the whole commercial mortgage market can be a daunting process. Our commercial mortgage brokers can help you navigate the market and find you the most suitable loan for your needs. Prepare your business plan. A comprehensive business plan is crucial when applying for a commercial mortgage. Your plan should clearly outline your objectives, strategies, and projections, demonstrating that your petrol station is a viable investment. Gather financial documentation. Compile your financial statements, such as profit and loss accounts, balance sheets, and cash flow forecasts, as they will be required by the lenders during the approval process. Arrange a valuation. In most cases, the lender will require a professional valuation of the petrol station you intend to purchase or refinance. This valuation will help establish the market value of the property and determine the loan-to-value (LTV) ratio for your mortgage. Submit your application. Once you have all your documentation and necessary information prepared, submit your commercial mortgage application to your chosen lender. Upon submission, the lender will review your application and conduct their due diligence, which may include assessing the property, evaluating your financial situation, and verifying the details provided. If your application is approved, you can expect to receive the mortgage funds within a specified period, typically ranging from 20 to 30 years for repayment cubed. Remember, each lender may have slightly different requirements and processes, so it's essential to do your research and ensure you meet their eligibility criteria before applying. Important aspects of commercial mortgages agreement. Interest rates and fees. When considering a commercial mortgage for a petrol station, it's essential to understand the various fees and interest rates involved. Commercial mortgages typically offer two types of interest rates, fixed and variable interest rates. Fixed interest rates remain the same throughout the entire loan term, providing stability for budgeting purposes. Variable interest rates, on the other hand, can fluctuate over time based on market conditions. In addition to interest rates, commercial mortgages also come with various fees. This may include an arrangement fee, which is often a small percentage of the loan amount, typically 1% to 2%. Legal fees and valuation fees may also apply, as these professional services are essential for assessing the property's value and ensuring all legal aspects are in order. Additionally, early repayment fees may be charged if you decide to repay the mortgage earlier than the agreed term. Repayment terms. Repayment terms for commercial mortgages vary, typically ranging from 20 to 30 years. The loan term and repayment schedule will be negotiated with your lender during the application process. It's crucial to consider the length of the loan term when determining the affordability of your repayments, as a longer term may result in lower monthly payments but a higher overall cost. Advantages and drawbacks. Benefits of commercial mortgages for petrol stations. A commercial mortgage offers several benefits when it comes to financing a petrol station in the UK. Firstly, it provides you with a long-term business finance option, allowing you to spread a large loan over many years. This helps you maintain your cash flow for other important business aspects. Another advantage of a commercial mortgage is the added flexibility it offers. You have control over alterations to the building and can extend the premises if your business grows, avoiding potential relocation costs. Moreover, you can sublet extra space within the property, generating additional rental income with lender permission. It should be noted that interest payments on commercial mortgages are tax-deductible. Owning a petrol station is a solid investment due to its stable source of revenue, as they are one of the few UK retail businesses that can provide 24/7 revenues. With a commercial mortgage, you are not only buying a business but also investing in property, which can increase in value over time. Potential challenges. Despite the benefits, there are potential challenges associated with commercial mortgages for petrol stations. One challenge could be that collateral is required for the loan, meaning that you risk losing the property if you fail to make repayments. However, as long as your business maintains a steady turnover, this risk can be mitigated. The application process for a commercial mortgage can be complex, and the associated fees might be higher than those of standard business loans. You should plan your finances accordingly and account for any additional fees. Lastly, it's important to keep in mind that while owning a petrol station with a commercial mortgage could lead to greater financial stability, it also means that you are responsible for any business fluctuations, including market changes and the ongoing shift towards electric vehicles. Consider the long-term effects of these changes on your business and stay informed about industry trends. In summary, a commercial mortgage for a petrol station in the UK offers many benefits, such as flexibility, investment opportunities, and tax advantages, but it also comes with potential challenges that need to be considered. By weighing the pros and cons and planning your finances accordingly, you can make an informed decision on whether a commercial mortgage is the right move for your petrol station business. Case studies. In this section, you will find examples of commercial mortgages for petrol stations in the UK. These case studies demonstrate the role of a broker, the process of refinancing, and the importance of a well-prepared business plan, where they provide guidance on how to navigate the complexities of acquiring and refinancing petrol stations. They emphasize that working with an experienced broker is crucial to finding the right financing solution for your unique situation. Another case study, showcasing a variety of finance options for different types and sizes of petrol stations. As a broker, we work to secure the optimal financing rates for their clients. When looking for finance options for petrol stations, it is essential to have a thorough business plan. Your business plan should outline your goals, projected revenue, and demonstrate the long-term viability of your business. We have the expertise in petrol station financing, connecting clients with commercial finance lenders that offer tailored solutions for their needs, including urban, rural or motorway petrol stations. It is also important to understand the different types of financing options available, such as commercial mortgages or franchise finance. As mentioned, commercial mortgages function similarly to residential mortgages, with lenders providing part of the cost to buy the petrol station in return for a legal charge over the property as security. Franchise or business finance, on the other hand, may offer more flexible terms, depending on the specifics of your situation and needs. In summary, when dealing with commercial mortgages for petrol stations, it is vital to work with an experienced broker. Ensure your business plan is well prepared and carefully consider the available financing options. By doing so, you can make informed decisions and secure the financing that best meets your needs. What are the financing options for petrol stations? There are various financing options available for petrol stations. The primary ones include commercial mortgages and franchise finance, which can be used to fund the purchase and/or redevelopment of the property. It is important to research the available options thoroughly and consult with a financial advisor to determine the best choice for your specific situation. What are the typical costs associated with building a petrol station? The costs of building a petrol station can vary widely depending on factors such as location, size, and facilities. Some of the common expenses include acquiring the land, constructing the building, installing fuel storage and dispensing equipment, and obtaining necessary permissions and licenses. You will also need to factor in ongoing costs, such as maintenance, staffing, and inventory. How to acquire a petrol station franchise in the UK? Acquiring a petrol station franchise in the UK typically involves a few key steps. Firstly, research and identify the brands that match your investment criteria and long-term goals. Then, contact the chosen brand's franchise department and submit an application. If your application is successful, you'll need to attend training and sign the franchise agreement. Lastly, organize any necessary financing and begin the process of finding and developing a suitable site. What is the process to buy commercial property for a petrol station? The process to buy a commercial property for a petrol station generally follows these steps. Identify a suitable location and conduct a thorough due diligence on the site. Seek professional advice from solicitors, surveyors, and financial advisors. Obtain any necessary planning permissions and licenses. Secure financing through a suitable option, such as a commercial mortgage. Negotiate and complete the purchase. Develop, construct, or renovate the property as needed. Are there any special considerations for the mortgage on a petrol station? Yes, there are special considerations for the mortgage on a petrol station. Lenders may require a higher deposit due to the perceived environmental risks associated with petrol stations. Additionally, lenders will likely take into account the property's location, trading history, and the overall financial strength of your business when making a lending decision. It is essential to work closely with a specialist broker or financial advisor who has experience in petrol station financing to navigate these complexities. How does the location affect the value of a petrol station? The location of a petrol station can significantly impact its value and profitability. Factors such as proximity to major roads and highways, neighborhood demographics, and competition from other petrol stations in the area can all affect footfall and overall business performance. Additionally, environmental factors like flood risk or nearby ground contamination can also affect the property's value. It is crucial to carefully evaluate the potential impact of a location on your petrol station before making any purchase decisions. For more information, you can contact us by clicking the link in the description of this video. Thank you for listening to our podcast. We look forward to coming together again in the next episode to share more information and experience with you. For now, goodbye.